Today's going to be part one of the key components of a letter of intent. What is a letter of intent? It is effectively the offer to buy a company. So it is not the definitive documentation, not the purchase and sale agreement, but it is where an acquirer highlights the key terms and conditions upon which they would be willing to acquire a business. So in today's video, we're going to talk through 7 components of an LOI. In the video later this week, we'll talk through another 7 components. But with all of these together, if you were a prospective acquirer for a business, you'd be able to really flesh out a very good framework or skeleton offer for a business. And if you are a seller of a business, these are the 14 elements, and there are always others, but these are the 14 primary elements that you want to look for when deciphering, trying to synthesize what exactly someone's offering for a business. So the first component is a bit more qualitative. It is the narrative. And so most LOIs will start off with, upon review of the business, we're very excited to put forth this offer because of reasons A, B, and C. We think the business is wonderful. And from this, you can at least glean if it's a form letter or if there's something unique or specific to your business. I would suggest if you're writing an LOI to make it not a just template, boilerplate language, because it is pretty apparent when it comes across the table. So even if it's a simple paragraph, we really like this business and are excited to put forth the offer contained herein for reasons A, B, and C, and we believe we will be wonderful stewards of the business for its next season of success. Element number 2, flipping to the quantitative, is the price. So obviously, as we've alluded to in a lot of other videos, there are many components to a deal other than the price. However, I assure you this will be the first thing somebody looks for when an LOI comes across the bow. Some LOIs will dictate a bit further as to how this price was calculated in terms of a multiple of EBITDA, what the adjusted EBITDA was deemed to be. However, in some situations, it's equally just a number on the document as well. There's often dialogue upon the receipt of these, and so whatever the rationale or formulation of it will ultimately be discussed, but sometimes it's included in the document and sometimes it is not. Component number 3 is the transaction type. And so generally speaking, and this is a topic for a whole other video, you can buy the assets of a company or buy the shares of a company. And so if you think of buying the assets of a company, you can think of an entity or a container that holds all of the things that the business owns: inventory, accounts receivable, customer contract, customer relationships, goodwill, and you are buying all of the things out of the business with the idea of putting it into a new entity. In a stock purchase, on the other hand, you can think of a string coming down to an entity or a container that holds everything of the business, and you are simply going to buy and take that string from the prior owner and carry it forward. Now, there are some simplicity aspects to the purchase of stock. However, from a liability perspective, oftentimes in the middle market and lower middle market, the preferential route is an asset purchase because it basically leaves any lingering or unknown liability with the existing entity and takes the assets out and puts them into a new entity. Again, a subject for a whole other video is the tax treatment of both of these as well, which there's differing views depending on what the strategy, size, composition of the company is as well. And that's where lawyers can be very effective, but generally speaking, just keep in mind that the transaction type is typically something that is elucidated or illustrated in the letter of intent. Number 4 is the structure of the deal. And so in some deals, it's 100% cash at closing, very simple. In other situations, it's 80% cash at closing, 20% of a seller note. In some situations, it's 90% cash at closing, 10% of an equity roll forward into the new entity, but they can take different shapes, forms, and fashions depending on what the objectives are of the seller, depending on how the acquirer is looking at the future existence of the business. And so the structure of the deal must be clearly delineated in the letter of intent as well. Even if it is contemplated to be 100% cash at closing, this isn't always the case. So if you are submitting an offer and that is your intention, best to highlight that clearly on the LOI. Number 5, we always want to look for the diligence requests and timeline. And so again, the LOI is not the closing documents. It is not the purchase and sale agreement. It is the offer highlighting the path from effectively the signing of the LOI to the closing. Typically a 30 to 90 day exercise. We obviously try to keep these from our perspective as short, expedited, and efficient as possible. In an effort to do so, we're always looking for what is the diligence timeline, what does it contain, what are the things someone's looking to understand better. Again, From a seller's perspective, we don't want diligence, and we avoid at all costs diligence being an evaluative thing where someone is saying, I'm still not sure if I want it, but I'm going to enter into diligence. Whether that's capital cost or opportunity cost, we want diligence to be confirmatory. And so if we're seeing an LOI come in where someone says, okay, we want to have lawyers come in to make sure all of the contracts are good, we want to do a quality of earnings to make sure all the numbers line up, that's okay. If somebody says, I really want to understand the business better to see if it's something I really want, that's a problem that should be handled prior to the submission of an LOI. And so we want it clearly laid out. And if you're a buyer, it can be advantageous to you to clearly lay out, I only need to understand X, Y, and Z things prior to a closing. And the more defined that is, the less it's obviously going to come across as a fishing expedition or evaluative, and the more it's going to be illustrated or characterized as confirmatory, which is what you want. Number 6 is the closing date. Although you have the diligence milestones, the diligence hurdles, the diligence timeline, it is still very important to put a very specific closing date. Now, there can be clauses that say if both parties agree, there could be a 30-day extension. However, 2 things people typically look for first in an LOI: price, closing date. Creates a bookend to the process, and it's important that it should be clear. Number 7, the last item for this first video, is financing considerations. And so in many situations, an acquirer could say all of the money is available. In other situations, it could say bank loans have been committed, equity has been committed, in which case you'd want to submit with the letter of intent, typically a letter from your equity investor, typically a letter from your bank indicating that you have been approved. And this is part of the dialogues we have with prospective acquirers prior to an LOI is, where's the capital coming from? Can you give us some assurance of that? Can you provide some support of that? And we'll be pushing towards that, but oftentimes it comes in with the LOI are these support letters, if you will, or indications of capital being confirmed. If there are any financing contingencies, then obviously that's something that needs to be very clearly discussed and agreed upon in the LOI if a seller is willing to accept that. And conversely, if you're an acquirer and you do not need any financing contingencies, then it's worth noting that, because that would bring a considerable advantage to your offer. And so that's a thought for today. Those are items number 1 through 7 of components of a letter of intent. And in the video later this week, we'll continue along numbers 8 through 14 so that you can have a very good comprehensive understanding of what should be included in an LOI, what you should be looking for, whether if you're a acquirer or seller of business. Hope the week's off to a good start for everyone. Keep pushing forward. God bless. See you next time.